Hello students, this is Professor Vincent Usaya. Welcome to my class. This is part 3 of chapter 10 presentation. Chapter 10, Auditing the Revenue Process. We left off at this place in part 2 presentation, talking about types of records and documents. We made a distinction between those two, and we also talked about the relationship between them. And we said that we use documents as the basis for recording transactions in the records. So the documents, most of them are source or evidence of transaction. Not all of them, but most of them are. So the question is, who cares? Why talk about documents and why talk about records? Why do we need to know as auditors? Well, for you to be able to effectively audit the revenue process, you need to know the related documents and the related records of revenue recognition. So let's take a look at some of them here. Number one, customer sales order. The question is this a document or record? Clearly, it is a document. So the document contains the details of the type and quantity of products or services ordered by the customer. So it's a piece of paper or form that the customer sends you, letting you know that they are interested in buying XYZ. Now, number two, credit approval form. That is a document, just like the name suggests. It is an approval form, meaning an authorized person in our company has to approve the credit for a particular customer. And we need to do that so that we don't wind up extending credit to every Tom, Dick, and Harry. When we do that, obviously as time progresses, that will compromise on our cash position. Now, moving along, open order report. Open order report could be considered as part of a record, because if you generate open order reports, that can give you another type of record. Now, what is open order report? Now, this is a report. These are the orders that have not been completed. So the customer sends you a bunch of orders. The ones that you have not completed or filled are considered as open order reports. Then we talk about shipping document. The shipping document is a document, just like it said. It says as a bill of lading and contains information on type of product shipped. So the shipping document, most of you will receive a packet from UPS. If you open it, you are going to take a look at the paper that you're receiving there. We call it shipping document or bill of lading. Again, like I said, how much quantity was shipped and other pertinent information is on the shipping document. Moving along, let's take a look at the sales invoice. What is sales invoice? Sales invoice is a document. It is the bill that you send to a customer. Of course, by the time you ship the goods to the customer, you need to send a bill to the customer for payment. Now, let's take a look at sales journal. A sales journal is a record. Now, sales journal is a special journal that is used specifically for credit sales and credit sales alone. All right, so it's a substitute for general journal from the standpoint of recording only credit sales. Now, moving along, we have customer statement. I just explained this a few minutes ago. The customer statement is the statement that we send to our customers, letting them know what their outstanding bill is. Because some customers will buy stuff from you, and for 2-3 months they have not paid. So you have to continue to send them on a weekly or monthly basis, however the case might be, a statement notifying them or letting them know what their receivable is. So that is customer statement. Let's take a look at accounts receivable subsidiary ledger. That's a pretty fancy name. Remember the general ledger? The general ledger is an accounting record. The accounts receivable subsidiary ledger is another accounting record that is specifically used to keep track of individual customers that owe us. All right, so we call that accounts receivable subsidiary ledger. So if you have a big book or ledger, each page is specifically for each customer that owe us. Moving along, let's take a look at the age trial balance of accounts receivable. This definitely will be a record because you can generate age trial balance of accounts receivable, meaning your accounts receivable is put into different ages. These are customers that owe us from 0 to 30 days, customers that owe us from 31 to 61 days, so on and so forth. So we call that age trial balance of accounts receivable. Why is that important? Why is that important? Because that also helps auditors to see how much accounts receivable might be collected by the auditee or by the company that we are auditing. So if they have a lot of accounts receivable, 90, 120 days past due, then we expect the company to make significant provision for uncollectible accounts or bad debt. If they're not doing that, there might be some valuation issue relative to the accounts receivable. So let's take a look at this remittance advice. When you receive your credit card, the part that you tear off and send to the credit card company along with your check, that is what we mean by remittance advice. So we also receive that from our clients as well. Now, cash receipt journal is another accounting record that is specifically used for all cash receipt. So that is cash receipt journal. Why is it important here? Because when we receive a payment from our customers, we have to record it somewhere, and we have to record it in cash receipt journal. How about credit memo? This is used to record credit for the return of goods by customers, because sometimes customers have to return goods to us for whatever reason. Tax of write-off authorization. We cannot just write off a customer's account, a customer that has not paid, without an appropriate officer doing so. So as part of our segregation of duties, we want to make sure that the due process is being followed before a customer's account is written off, or we have proper authorization to write off a customer's account. So here are the main functions of a typical revenue process. Number one, we did talk about this when we went through the flow chart. Number one, order entry. That is the first function of the revenue process. Individuals or personnel that receive orders from the customers. So that is a department of its own. Number two, credit authorization. We need a department that would go through the due process of not due process, for lack of better words. The department is responsible for making sure that credit is being extended to customers that have credit worthiness. So that is the credit authorization department. Now, then of course we have the shipping department has their own function. The billing department also have their own function. Cash receipt, accounts receivable, and general ledger department. So all these functions have to be separated because of segregation of duties, or the importance of segregation of duties. So here are the main functions. So I just briefly talk about them. I'm not going to go into them in details. The order entry, like I said, that is the first function in the revenue process. And those are personnel that take orders, either by phone or by fax. And sometimes some customers will ship or send their order via the internet. So let's take a look at credit authorization. So again, the credit authorization department has to authorize the transaction before a shipment are being made to the customers. All right. Oh yeah, the word I was looking for when we talk about credit authorization is the credit department has to do their due diligence. That's what I was looking for, to make sure that we are extending credit to customers that are likely to pay in the future. Now, of course, after the shipment is done, why do we have to do that? Again, because we don't want to extend credit to every Tom, Dick, and Harry, and we are not able to get paid eventually. Now, how about shipment? Yeah, the shipping department are going to do their job by shipping the goods. However, we need to make sure that the billing department actually be the customer, because if you don't put this stuff in order, sometimes you ship and you don't send bill. You think there are a lot of customers out there that are going to receive something without receiving bill, will call you and say, well, I didn't receive my bill and I just received my goods. Some customers will do that, but not too many. So we need to make sure that after shipment has been done, the billing department also takes care of business. Another major function, cash receipt. When cash is being received, we need to make sure that the cash is recorded properly and accurately. All right. So That is the cash receipt function. Of course, we also need to make sure that all the cash received actually wind up in the bank. Accounts receivable, that is another function. Some companies are so big that they have accounts receivable with 10, 15 employees. That is all they do, just monitoring credit sales and whether a customer has paid or not. Now, of course, the general ledger is the centerpiece of all these functions because everything has to be integrated into the general ledger. Now, let's take a look at this key segregation of duties. What do we mean by segregation of duties? Here we are taking a look at all the relevant duties relating to revenue process and splitting them into different departments so that no one person is in a position to do something by way of stealing from the company. All right, so we have to map out the segregation of duties properly. So I don't want to spend too much time on this. You can go through this, and it is not very visible here. Let me just go ahead and share with you the last bullet. Take a look at this: authorization of accounts receivable write-off. What you don't want to do is have the individuals that are responsible for accounts receivable and recording accounts receivable also be responsible for writing off a customer's account. So if you do that, then they can actually write off a customer's account, also do the paperwork, and have a side deal with the customer and get payment behind under the table. So the treasurer usually is responsible for authorizing the write-off of accounts receivable, even though the accounts receivable department is responsible for the paperwork. So moving along, let's take a look at the inherent risk assessment. So what are we talking about here? Here we have 4 inherent risk factors that may affect the revenue process, and I think this would be a good cutoff point for part 3 of this presentation. So we'll take it from here in part 4.